Good morning, trading world. It is June 29th, 2022, just after 8:07 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. With today being a primary expiration day and two important events on the calendar today, we need to be prepared for a wide range. Expiration days are known for being shockers. If order flow is overly negative, you can get a pop-up and a reprieve from sell side activity. And if it is overly bullish, you can see a flash in sell side activity. It kind of makes you wonder how things are going to be when daily expirations actually take hold. All signs are pointing down on intraday sets, but we are also deeply oversold on intraday sets. I am starting to see the beginning of bullish divergences start to form on the daily and weekly time frame, going into what is usually the most positive part of the year. So be patient. Let's see if we get a higher low or a lower low with bullish divergence between now and Friday. That will definitely be a sign for a big bear market rally coming together. The current channel we are in is 379 up to 397. However, we are on the edge of that next channel lower, which is 379 to 364. At least we were when I started doing my analysis this morning. And it could be quite possible we dip our toes in the lower channel before a rally back out. But with all of that being said, let's get to the key levels of the day. Alright, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance 380 to 381. Then we have our queen resistance 382 to the 384 area. And then we have king resistance 385 to the 389 area. I kind of expect a lot of resistance where it may take a time or two or rejection or two to get past this 382 area if it happens today. But I definitely look for us to get up above this level on Friday. Now to the support side. We have our jack support at 379 to the 378 area. Then we have our queen support 377 to the 375 area. And then king support 374 to the 371 area. The main thesis for today is bullish, closing above the 380.65 with a projected target high of between 382 and 386. The alternate thesis is bearish, closing below the 380.65 with a target low of between 378 and 375. The current channel we are in is 379 up to 397. However, we are on the edge of that next channel lower, 379 to 364. Let's get into the scenarios for the day. All right, our first scenario and highest probability is our expanded range day structure. We could look to set a decision area low boundary around the jack or queen support area before chopping back and forth and pushing boundaries higher for the day. That is our expanded range day structure. Let's move to the next scenario. All right. Our next scenario is pretty much a toss-up. Well, the last two scenarios are pretty much a toss-up. The probabilities are about the same. But first we have our trend day up. And with our trend day up structure, we open gap up and start with a fade back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the morning. We find midday chop around either the possible queen or king resistance area. And we usually start the second half of the day up with a head fake, continuing that trend, but don't, and it'll be interesting today to see how much or if we fade going into the close, because that's going to give us kind of a key for tomorrow. So that's the second scenario, our trend day up structure. Our last scenario is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either the queen or king support before spending the same energy we used going down to go back up the second half of the day. And this is our rounded reversal day structure. It also has a big vice versa warning on it, which means you should also prepare for a move that would look like this. Instead of going down off of the opening, we could continue up. And in that continued up, we find our midday chop around either our queen or king resistance area. And then the second half of the day, we come down with the same force that we went up with. And that's the vice versa warning on the rounded reversal day structure. So those are the key things to look out for today. I'm going to be looking for signs. I see individual things. I mentioned I'm starting to see that bullish divergence form, so I'll be looking to see between now and Friday whether we're able to form either a higher low or a lower low with bullish divergence, because all these things add up into something that I'm seeing for next week, being that we have a holiday weekend. No one's going to want to remain too deep into positions going through that holiday weekend, and it's the first of the month where those new fund flows hit, and we could have some short covering rally depending on what happens Thursday and Friday, because I do see another retest down between now and then. So we could have an explosive short covering rally going into next week, along with new fund flows, which could really spark a big bear market rally. So all of these things are kind of slowly coming together. And if that happens, if I get the higher low or the lower low with the bullish divergence, I will be looking at taking some type of long position, albeit very small, and something that I don't mind losing over that holiday weekend. But it all depends on how things look on Friday. So, as always, please know and understand your risk. That's the number one job as a trader. Protect the capital that you have so that you can keep it to make money in the future. And I hope this helps. And as always, wishing you a positive trading day. Have a great one.